Hey everybody, Boris. Welcome to the weekly technicals for majors for the euro dollar, dollar yen, and pound dollar for January 30th through February 3rd. Data deluge comes, which is really going to be the theme of next week. Just as last week was very quiet with very little data coming out of the markets, next week is just chock full of data across the full spectrum of currencies, including, by the way, of course, the Japanese yen and the dollar, with the FOMC meeting, the BOJ meeting, the non-farm payrolls on Friday, and for the pound, all the PMI data coming out. Plus, I believe on January 31st, the vote in Parliament on Brexit. So it should be just an absolute tumult of information, which probably is going to create a lot more interesting volatility than we saw last week. Last week was a relatively tame week as far as volatility, but this week we could really open up some ranges, and I think it's very important to take a look at the ranges as they stand right now and see the key points of weakness and strength of where things can really break one way or the other. For the euro, the range right now is sort of 106, 108. For the yen, we took out the 115, but with not enough conviction. Really, for the yen to reestablish the unambiguous upward trend, we need to see the 116 taken firmly this week. And it's going to be very interesting because we have the FOMC coming out midweek, and then we have the non-farm payrolls. And as you look at the U.S. data, the U.S. data has actually started to slow down into the end of the year. And it's going to be interesting to see if the non-farm payrolls kind of confirm the idea that maybe the U.S. economy has actually peaked, which would be very much counter to the sort of dollar bullish move that everybody is tilted towards. I think there's potential here for a pretty serious downside surprise if the data comes in weak. And I think it's certainly worth watching, especially this 113 level, which has been held 3 times last week. That breaks to the downside. It suggests maybe dollar yen could have a move all the way down to 110 on a corrective basis. And the pound, of course, is its own story. We'll have all sorts of UK data coming out, which could be interesting. At this point, what's interesting is I think that the market has made peace with the idea of Brexit in UK. And given the fact that there's very friendly relations between UK and US, there's sort of this belief that UK is not going to suffer nearly as much as they thought it would be. It wouldn't be nearly as isolated as it would be under the current conditions. But we'll have to see how it trades out this week. This 126, 127 seems to be a very big, strong resistance level. And so far, end of the week, the numbers kind of held us up as far as trade goes around those levels. Let's take a look at the charts here, and I'll show you exactly what I mean as far as where everything seems to be butting heads. So euro clearly butting heads around this 107.50 level, very much the big resistance. Euro really is sort of an anti-dollar trade at this point. There isn't any clear European directive, and we don't even have that much European data this week to drive us. So it's really, the one thing I think that's sort of interesting, though, is if you look back over the start of the year, what starts to take shape here very clearly is a sort of a surreptitious but very clear uptrend. Everybody was convinced we're going to parity at 104, and yet the exact opposite has happened. We've based at 104. We talked about the fact that euro definitely looked like it was based and was ready for a counter trend rally. The key thing about this counter trend rally now is that we're coming up against this very, very critical resistance right over here. This 107, 108 chunkiness. And a true dollar weakness story, a dollar weakness that would just kind of begin to fall apart on the notion of a Fed 3 rate hike and strong U.S. growth going forward, could push us all the way out to 108, maybe even 109 on a short squeeze basis. Remember, there is a lot of money that could be trapped because a lot of money got short around this level. And if we come back and squeeze ourselves out here, the squeeze could go all the way up to 110. So one of the things I think is interesting when you're looking at this chart is just how clear and definitive the lows are. The lows are holding. It's showing you that there's a very strong uptrend here, that the trade in the euro right now is buy the dips, not try to sell the rallies. Unless the 106 gets taken out to the downside, and really unless 106 closes on a closing basis, it's hard to fade this move. In fact, the smarter move right now, technically, maybe to just join it on the idea that dollar shows further weakness as we go by. Now, the dollar weakness story is not definitive by any means, and it's one of those kind of things that's going to be very difficult to ascertain just from the technicals or the fundamentals. The fundamentals show us that the U.S. economy has slowed. There's very, very bad numbers actually coming out of the GDP data on Friday, but we have new data. We'll have the income and spending data coming out. We'll have ISM data coming out. The critical question is, has the Trump momentum provided a boost for the U.S. economy, or is it all just smoke and mirrors? Looking at the yen, you see a huge amount of hesitation here of a pure dollar bullish move. On the other hand, you do have to respect the fact that we've definitely based at this 1250 support level. However, if the formation here turns negative, in other words, let's say we peak to 1550 and then come back down, we trade below the 1500 on a closing basis. Essentially, if we cannot penetrate the 116, if we spend the first part of the week underneath these levels, then there's, I'm just going to pause as always. It's inevitable. The moment we start recording, we're going to hear New York City sirens. We'll let them go by. Anyways, my point is that if this level holds for 2 or 3 days and does not penetrate to the upside, the path of least resistance goes to the downside, and that's where I think it could be very interesting. The trade here is kind of on the edge of whether it's a pro and anti-dollar trade. It's sort of at the peak, and it's very much worth watching how well we trade around this 1550 level going forward, because to truly create a powerful dollar breakout, we do need to see 116. At that point, you definitely want to get long dollar on any kind of a pullback, because we will probably have a move all the way out to the challenge of the highs from middle of the year. But for now, it's really an open question. Now, cable is another story that we were bullish for quite a long time for the last couple of weeks, because it clearly turned around. And this, we talked about the idea that 125 was big resistance. They broke through. But for the last 2 days, I think the post-Brexit euphoria is starting to come back out, and this 127 still hangs very, very heavy. So cable could actually be a relative weakness story here going forward, if sort of all the good news is baked in, and now the market starts to just basically try to figure out how the UK is going to actually deal with Brexit implementation. More importantly, a whole bunch of UK data that's very important. The manufacturing, the construction, the services PMI is going to be coming out this week. And if that shows a wobbling, I have this sort of suspicion. It's by no means any kind of a quantitative scientific notion, but I do have the suspicion that we kind of peaked at the end of 16 as far as growth goes for the Anglo-Saxon economies, and we may be actually having a little bit of a buyer's remorse as far as economic data goes. If the economic data is weak, that's really going to confirm, I think, the tops over here in cable. And as long as 127 doesn't get penetrated, cable could really drift all the way back down to 24, possibly even 23 as a support level. That would create a secondary failure here on the highs, and suggest a much more negative construct for cable. So huge amount of data, lots of stuff to watch out for. I think the critical thing here is to see how the front of the week trades out and position accordingly. And of course, always be mindful of the data that comes ahead. FOMC this week is going to be very, very important for the U.S. and could be the much more important tone in some ways than even the non-farm payrolls on Friday. Wish you guys the best of luck, the best trading. Boris, over and out.